Dear viewers, I promise whether you are a beginner in the stock market or don't know anything about the stock market or in few years in the stock market, after watching this video, you will get to know how anyone can earn 1 crore from the stock market just by investing 10,000 rupees monthly. The comment section is also open, so after watching the video anyone can comment whether it is achievable or not. And remember, I am not going to sell any course or any paid software, nothing. So rather I am going to share some invaluable lesson completely free of cost. Just one condition: you have to watch the full video without skipping any part. In this video I'll cover what is stock market, then how to invest in share market, then why everyone should invest in the stock market or share market, why a stock price moves up and down, some important points to remember, and finally how anyone can earn 1 crore just by investing 10,000 monthly in the stock market. So a complete beginner's guide, and that can surely help you to earn once a year just by investing 10,000 monthly. I am Prasenjit Paul. I have authored the best-selling book How to Avoid Loss and Earn Consistently in the Stock Market, and also actively investing in the stock market since 2010, achieved financial freedom from this market. So you are going to listen from a person who has actually achieved success from this stock market, not just I'm reading some books and telling to you. If you want to watch the same video in Hindi, अगर आप हिंदी में सुनना चाहते हो इसी सेम वीडियो को, तो ऊपर दिए हुए लिंक में आप क्लिक कर सकते हो. If you want to listen the same video in Bengali, তাহলে বাংলার জন্য আপনি উপরে দেওয়া লিংকে ক্লিক করতে পারেন. একই ভিডিও বাংলাতে অ্যাভেলেবল আছে. So let's get start about what is stock and stock market or share market. Suppose you are a business owner. What's your business? You own a departmental store which is very successful. You are doing very good business. Now what you want to do is you want to open the similar stores, 10 stores across the India or different parts of the city. Now let's suppose for opening that 10 stores you need fund. Maybe you need 100 crores because you need to purchase land, you need to develop buildings and all. Now, from where you can get that 100 crores? The first option is you can surely go to bank and take a loan of 100 crores. But the problem is, if you take loan of 100 crores, you have to pay monthly interest, EMI, and also you have to repay that loan completely. What if you approach to a group of people where you can say, okay, I am going to open 10 stores, I require 100 crores, and 100 people came and say, okay, I will give you 1 crore each. So 100 people giving 1 crore each. You don't have to return the money, rather you are giving a share of that stores, and you are saying, okay, if those stores become profit, if those departmental stores make profit, so you will get the share of your profit. So the benefit of yours is, in this process you don't have to, like in loan, you have to repay the entire money, the entire 100 crores. So in this process you don't have to repay the 100 crores. There is no obligation to repay it, and the persons who are giving you the 100 persons, those are giving you money, they also agreed that if those stores run well, then only they can get the profit. So that's a win-win situation for both, right? Because this 100% know that, okay, so this person has already running one departmental stores very successfully, selling clothes and all those things. So he may run another 10 stores successfully. So these 100 people, without actually running the business, they can actually enjoy the profit of those stores. So the same thing is in the stock market. So today all you are seeing, there's the shares of Reliance, TCS, ITC or whatever. Remember, multiple years back, these companies like Reliance also came up with the IPO, that's initial public offering, which simply is mean, okay, I'm coming into the stock market for raising fund, for taking money. With that money, what I will do, I will set up factories across, I'll set up some large factories, and if those factories are profitable, then you will get a share of those profit. So similarly, Reliance, TCS or whatever the company you take. Recently you might also heard that the companies like Burger King, they are also coming up with the IPO. So remember, so that IPO, that is called the primary market, and after the company lists the share, so then that is called the secondary market. So what happens in the primary market? So the company is coming up with IPO, and people can subscribe, and the subscription process is also online, so it's everything easy. So when you are buying a one share of Reliance Industries, so what you are actually buying is you are becoming a part owner of Reliance Industries of that equal proposition. So whenever Reliance Industries makes money, or if the companies make profit, you stand to benefit from it. If the same company keeps making loss year after year, then you will also going to lose your investment. So that's in simple term is share and stock market. So share, it's very simple, it's a part ownership of that company, and share market so is a market where these shares are traded. Nowadays everything, the share market completely becomes digital. So earlier, like 10-15 years back, it's not that easy process, you know, people have to visit Dalal Street or maybe the Calcutta Stock Exchange and they get the physical share certificate. Nowadays it's not, nowadays it's the complete digital process. Sitting from the comfort of your home, with just one click you can purchase one share of any particular company, and as per your own convenience you will get that share in the demat, and as per your own convenience you can also sell that share. Now remember one thing, like as I'm saying that the IPO, primary public offering, initial public offering, or the primary issue. Remember, suppose today, recently, like the company Burger King came up with the IPO. So let's say for example they came up with the IPO of 1000 crores. So many people subscribed and they got their shares. After that, what happens, like if you can recall the example of the departmental stores, like 100 people came and subscribed their shares. So after the owner, the business owner gets money, then these 100 people can sell or purchase those shares to another people. So that is exactly the share market. So a share, when a stock price rises in the secondary market, so when people investors changing hand their share and the stock price is rising, then with the rising stock price, it's not like that with the every rising stock price the promoters or the owner of the company is getting money. It's not like that. The promoters or the owners already get the money in the IPO. So first time while they issued share, they already got that money. After that, with the increasing stock price, although there is no direct benefit of that company, there are indirect multiple benefits. Like with the rising stock price, the company valuation increase. Like when the company valuation increase, they will get, for any further expansion, if they approach for banks, they get loan at better rate. Like if I or you approach to bank and get the loan at 10%. So if a company is a huge company, maybe at Reliance, they can get a loan at 4-5 at much lower interest rate if the market valuation or if the company profile keeps going strength on strength. So I hope that's clear about what is share and share market. Now the next point, why everyone, I'm repeating, everyone should invest in the stock market. Suppose you are a very highly skilled professional, be it doctor, chartered accountant, or like graphic designer, or whatever, you have multiple degrees and you are earning very big, let's say for example you are charging 50,000 rupees for 1 hour of your work, be it as a chartered accountant or doctor. So if you charge 50,000 rupees for 1 hour of your work, even maybe it might be in your salary. So at max 24 hours in a day, so at max in 24 hours you can make at max maximum to maximum 12 lakhs, not more than that, right? Because everyone has a 24 hours. Obviously 24 hours work is not possible, but still, just for example, let's consider the maximum. You can make maximum 12 lakhs per day, right? But do you know, large businessmen, maybe Ambani builders, or they are literally making few crores per day. How that is possible? That is possible because they are not doing anything. They are doing nothing. Rather, thousands of employees of Reliance Industries are working every day. So in share market, or like whoever the richest people, if you look at any rich persons across the world, they are rich because someone else, because they are not, I mean, working for themselves, because everyone has the limited 24 hours. It's not like that you have Mukesh Ambani has 30 hours or I have 12 hours. It's not like that. Be it Jeff Bezos, Mark Zuckerberg, or whoever, Elon Musk, whoever have the same working hours. But the key to become rich is, they are the rich people are actually, under the rich people, actually thousands or even lakhs of people are working. So they are rich because these people or their employees are working. So now you will say, obviously it's not possible for anyone to be a business owner to keep employees of 100 or 500 people, right? Only By investing in share, while you are investing in stocks, you are becoming the part owner of that business. So only on that point of time, all the employees of the company are actually working for you. It means, suppose you purchase a share of TCS, right? Maybe you are an employee of an TCS and also purchased a share of TCS or Infosys, whatever. So whenever you are purchasing a share of Infosys, remember, you are not alone. Rather, thousands or maybe I don't know the exact number of Infosys employees. So the huge number of employees are actually working for you. They are working for Infosys. So the Infosys is making better profits, and while the Infosys will make better profits, the share price will keep increasing. So basically, you are putting money to somewhere where thousands of persons are working under you. So this is the exact reason why everyone should invest in the stock market, because that's the only way for any normal person, for any common person to part own a huge business or to make money works for you. Now let's understand how one can invest in shares. So to invest in share, you need Demat plus trading account. Now many banks, most of the banks like ICICI, HDFC, Kotak, they offer Demat and trading account. Apart from that, standalone brokerage like Motilal Oswal, Sher Khan and all, they also offer trading plus Demat account. But the problem is, most of the banks, this standalone brokerage, they offer Demat and trading account is quite bit expensive, be it brokerage and other charges. So I prefer the cheapest option that basically I am also using since the last 5-6 years. That's Zerodha. As I am using it since the last many years, so I don't hesitate to recommend you the Zerodha platform, because that's the cheapest and a reliable platform. So in the link of this, the description box of the video, you'll find a link. By clicking this link, you can open trading plus Demat account within just 5-10 minutes from the comfort of your home. So earlier, like 10 years ago, you need to do a lot of paperwork. You have to visit physically for opening a Demat and trading account. Nowadays, it's not like that. All you need is your PAN number, your Aadhaar number, and if the Aadhaar number is linked with your mobile, then you can get the OTPs and all, and then there will be some video verification and it's done. So it's a very simple process. So you just need to click on the link that is given below in the description box and visit the Zerodha website, and you will get step-by-step option to open the trading and Demat account. That's a very basic step. After opening trading and Demat account, you can buy or sell any shares with just a few click, or even in the mobile application with just a few touch. The demo also provided by the company like be it Zerodha or with any another trading service provider. So if you can ask for a demo, if you don't know anything how to buy sell, so they can provide a demo. That's also very simple. Once anyone will show you, or even without demo you can do it, because there are a lot of tutorials for any particular brokerage company is there. So ultimately you can invest in shares just by opening trading and Demat account. That process is also very easy and simple, and that can be done from the comfort of your home. Now let's have a look why the stock price moves up or down. It's the simple supply demand theory. So let's elaborate it. Suppose in any particular market, you might notice that before any puja or before any festival, particular vegetables price goes up. Why that happens? Because although the supply is almost fixed, but on that particular time before the particular festivals, these vegetables or fruits, the demand of that vegetables and fruits moves up, and thus the price moves up. Same with the share market. So in a share market, you can assume that, or I can say that the supply, the number of shares in the market most of the time remains fixed, remains almost same. Sometimes it's not like that every day the number of shares in the market keep increase or decreasing. It's not like that. Maybe once in a year it might increase. That's a completely different story. But most of the time, maximum period, the number of shares or the supply is fixed in the share market. So it's completely depends on the demand. If the demand increase, the share price will increase. If the demand decrease, the share price will decrease. Now you will ask why the demand will increase. The simple answer is the demand will increase only if more and more people will buy, and because if the company performs better, for example, Let's take the example of Maruti Suzuki. Suppose month after month Maruti Suzuki is reporting very good sales number, car sales number. So if that happens month after month, more and more people will come and buy the shares of Maruti Suzuki. So and then the share price will keep increasing. So to give a more precise over long run means maybe 3, 4, 5 years, the share price of a company will increase only if the company performs better, be it the profit growth, sales growth. If the company performs better, you will never find over long term. Remember, I am emphasizing the word over long run. Over 3, 4 years, you will never find a company performance, profit, sales is decreasing, but the share prices keeps increasing. That will never happen. So over long run, the stock price is a reflection of the company's performance. If the company performs good, the share price will keep moving up. But in the short run, in 1 day, 2 day, or in 1 month, that's not always true. The share price might fluctuate without any reason, although that's the supply demand theory again, but that supply demand not necessarily come from a particular reason. This is why, and why that happens, because in share market, crores of millions of people come for very varied reason. Many people purchase a stock today and sell today itself to make profits. That's called intraday trading. Some people buy today and sell maybe within a week or within a month. That's called short-term trading. There is also another thing that's called future and option. That's more complicated. So as a beginner, you don't have to know that part. So as a beginner, focus on the long-term investing or focus on investing, because that's not that much complicated, and more people can build wealth from the long-term investing than the short-term trading or intraday trading, because the statistics are saying there are very less number of people who is successful in the intraday trading or in the short-term trading, and that too because they are into the full-time into the trading. If you already have some another job or profession, or if you are a beginner, so first master the long-term investing. So over long run, the stock price is nothing but a reflection of the business performance. Now let's address another important issue. Many of the times you might heard from friends or relatives like the stock market is risky. So is it really risky? Okay, my answer is, suppose you just got driving license to drive a 4-wheeler, a car, just 1 month or 2 months ago. And now with that driving license, you just move to a hilly road, maybe like Manali or like Kashmir or like Darjeeling, and you are driving in a hilly road. So for you, it's 100% risky. And not only that, the chances of accident is very high. But imagine a person who is born on the hill is driving on the same road for the last 15-20 years. For him, is it risky? No, it's not that much risky. The same with the stock market. If you are new into the stock market, if you don't have adequate knowledge, then obviously this is risky. But if you have vast knowledge, if you are in the stock market for the last 10 years, then you can manage the risk very well, and for you, stock market is not that much risky. So to answer it simply, if you have adequate knowledge, then stock market is not risky. If you don't have any knowledge, then obviously stock market is risky. So it's all about your knowledge. Increase your knowledge, increase your experience, then obviously you can easily manage whatever the risk is there in the stock market. Now the question is, how anyone can earn 1 crore rupees from the stock market just by investing 10,000 monthly? Well, so till now from the discussion, one thing is clear, that is, if you can invest in good companies or large companies, or if a company can grow, like say for example you invested in TCS, Infosys, Reliance Industries, and these companies do good business, this company grow over 10-15 years period, then the stock price must increase. There are no exception of that. Over a 10 years period, over long run, if the business do well, then the stock price must do well. I'm not talking about the short term, but long term. So it means somehow if you can invest topmost large big companies in India and keep investing over the long period, then you can obviously make money, right? For that, let me tell you the one point called Nifty. Many of you might already heard the terms like Nifty, Sensex. Many of you might already know. If you don't know, or just for the basics, I am repeating, what is this Nifty? Nifty is a basket of 50 large reputed companies in India, which is an index. Nifty, Sensex, all are index. Sensex is representing 30 companies. Nifty is the 50 company index. So when you say that okay, today market moves up by this much percent, 1%, 2%, basically Nifty moves up by 1%, 2%. Nifty is a kind of representation of India. So if you get an option to invest in all these 50 Nifty companies, then obviously you are indirectly investing in the Indian growth story. But if you want to directly invest in all these 50 companies, what will happen? It's not possible within 10,000 rupees. Moreover, you can't get that exact allocation, because in the Nifty 50, it's not like that all the 50 companies have same allocation. These companies have different allocation. For that, there is a concept, there is a platform called Nifty ETF. What is this ETF? ETF means exchange traded fund. What is this Nifty exchange traded fund? This is a fund where many people, the fund collects money from multiple investors. Say for example, you are investing 10,000, someone 20,000, another one 1 lakh. So they accumulate multiple crores from that, and they simply invest these 50 stocks in that proportion. I mean, they simply replicating the performance of Nifty. It means you can purchase a Nifty ETF just with few thousand of rupees, but you are indirectly purchasing all these 50 stocks in that equal portion, and as per the return of the Nifty, if Nifty generates 12% return, then the Nifty ETF also generates the same return. So what are the Nifty ETFs? These are from the multiple fund house, like there is SBI ETF, then there is UTI Nifty 50 ETF, HDFC Nifty 50 ETF. I am also in the subtitle, you can also show the names and the code names of this Nifty 50 ETF schemes. Now, the point what I want to convey is, if you invest in Nifty 50 ETF, be it from HDFC or SBI, you are indirectly investing in the Indian growth story. The interesting part about this Nifty 50 is, it's not like that. Say for example, you are investing in this Nifty 50 ETF for the 10, 15, 20 years, then you are indirectly investing in the Indian growth story, or you are indirectly investing in India. The interesting part is, it's not like that all these 50 stocks remain constant over the last 5-10 years periods. It's not like that. Rather, what happens, if a company don't perform, then automatically that company excludes from Nifty 50 and a better company replace that company. For example, like few years back, Yes Bank excluded from the Nifty 50 because Yes Bank was not performing good. Yes stock price crashed a lot. The bank performed very poorly. So Yes Bank excluded from Nifty 50, and companies like Divi's Lab, they came, that company come into the Nifty 50. So it means by investing in Nifty 50, you are indirectly investing in the topmost reputed largest 50 companies in India. And as this list automatically changes, I mean the Nifty composition automatically, the bad companies, the companies over a period of time, if the company don't perform well, that company automatically excludes and the better one includes. It means you don't have to do anything. That's completely passive investing. Simply you can invest monthly on this Nifty 50 ETF fund and your capital will grow automatically. There's no knowledge required, there's no need to do research, no need to do newspaper, nothing. So it's completely passive. You simply invest and forget, and your money will automatically grow. Okay, so in this process, how many years it will require to make you 1 crore? Well, in the last 5 years, the Nifty ETF or the Nifty generated CAGR return of around 12%. In the last 10 years, it generated around 11%. In the next 10 years, in the next 15 years, the return might be even higher than that. It's all depends on the Indian growth story. But just for example, let's consider that in the next 10-15 years also, the Nifty 50 generates this 11 to 12% CAGR. So if that happens, and if you invest 10,000 monthly and increase by 10% every year, it means in this year you are investing 10,000 monthly, next year you are investing 11,000, because every year your salary, your business income, whatever, that should also increase. For 10 years ago, whatever be your salary, it's not same for the today. So as per your increasing income, I'm just considering 10% increase every year in monthly investment. So this year 10,000, next year 11,000, and so on. It will take around 15 years to build a corpus of 1 crore without doing nothing. I mean, you just you can also, like in Nifty 50 ETF, you can either directly invest through Zerodha and all, or you can simply invest like mutual fund SIP. So if you do the SIP, you can also put a standing instruction like whenever your monthly salary credits automatically, or a particular day on the month, automatically your account debits and that amount goes to this Nifty 50 fund. And in the same process, if you continue doing 15 years without any knowledge of the stock market, without any research, without any company analysis, without tracking market, without following newspaper, in the 15 years time period, you can make 1 crores. Yes, you heard it right, 1 crores. You might ask, few of you might ask the question, 15 years, oh, that's a very long period. Remember, 15 years, yes, long period, but you are doing nothing. That is the best passive form of investment. No other option can give you this kind of return. I can call it is a much better version of fixed deposit, because in fixed deposit you might earn 5-6% kind of CAGR. In fixed deposit also you don't have to do nothing. You are just simply putting that fund in the bank and forgetting. Here also you don't have to do nothing, assuming that you don't have enough knowledge in the stock market, but your money will continue to grow. Is there any chance like after 15 years you will still have the loss in this Nifty 50? I'll say absolutely no chance. If that happens, then what will happen? Your salary won't increase if even after investing 15 years the Nifty 50 generates a negative return, then India must enter into deflation. Like every year now, your inflation, as per the increase of inflation, the vegetable price or the market price increase, your salary might increase. If by any case the price got decreased, your salary reduced, then only that things might happen. But otherwise, in normal situation, it's not possible to go to happen like this. Rather, you can earn even earlier, maybe earlier than 15 years if the return is much better than that. Now the question is, can I accumulate this once year much earlier than that? Yes, obviously you can do. Like for example, apart from this 11% CAGR, if you can do 25% CAGR return over the next 15 years and invest every month 10,000 and each year you invest by 10% of the amount, over 15 years period you will accumulate approximate 3 to 4 crores rupees. But remember, for that extra return, from 11% to 25%, you need to acquire a lot of knowledge. You need to learn fundamental analysis, technical analysis. You need to continuously follow the company. You need to continuously monitor your investment. You need to read newspapers, magazine. So there are a lot of extra works to do for that, but that's easily possible. In fact, we are also doing the same. For that, the first step, the simple step you can do is, like for gaining knowledge, for tracking the market, the first free option is simply subscribing this channel. If you subscribe this channel, you will get videos for my upcoming stock market related videos. Then the second step, I can say that you can read my book, the best-selling book, How to Avoid Loss and Earn Consistently in the Stock Market. The link is available in the description box. Just because I have written the book, I'm suggesting it's not like that. Rather, if you go through the Amazon reviews or the Google reviews, most of the readers talked about that is the best easy to understand book written on the Indian stock market concept. Then you can also go through my course. I have a detailed fundamental analysis course, and after that you need to go through multiple things. You need to constantly do research, monitoring and all of these things. Now if you say, okay, 15 years, that's a whole lot of time, or even if I get, what if is there any possibility like I can again earn double money within every year? I can double my investment in every year? No, unfortunately that's not possible. You will find many places, you will find many people will advertise like, okay, take my subscription, take this course, you can earn double in 6 months, 1 year, 2 year on and all. Just remember one thing, every quick money making trick is actually a money losing trick. I'm telling you, lot of people say, no, the stock market is risky, I lost money in the stock market. I'm telling you, the most common reason of losing money in the stock market is the greed. People want to make money faster. They just want to double in 1 year, 6 months, and in this process they jump in this future and option, multiple risky trades, and they lost money and they say stock market is risky. Whatever the method I am just telling you, without any knowledge, without doing nothing, you can easily earn 11% or 11-12% CAGR and can earn crores over a 15 years time period. Many people may not think, oh, 15 years, it's a long period, I just want to earn money quickly. You remember the movie, that's Fear Hera Fairy, 25 दिन में पैसा double. Every quick money making tricks is actually a money losing tricks. So if you are an absolute beginner, if you don't have any knowledge in the stock market, I'll suggest start with doing SIP, monthly investment in this Nifty 50 ETF. Remember, in this Nifty 50, if you invest in Nifty 50 ETF, I don't earn any commission. I have no profit at all, but I am suggesting, I am sharing you this invaluable lesson with free of cost only for your benefit. After that, as a beginner, after that you can explore, you can learn fundamental analysis, company analysis, technical analysis, and then you can explore ways that how to maximize that return. And after some point of time, if you think that, oh, you don't have enough time to learn, you don't have enough interest to do the learning and all, simply you can go for the passive investing, just invest and forget, nothing to do. So now you put your comments in the below section. The first, at the beginning of the video, I had promised to share you the way with the absolute beginner, without even knowing anything, you can earn 1 crore from the stock market. So now put your comment whether you get the way or not, whether this is feasible or not. If you find any better way, I know that you won't find any better way, the risk-free. I'm not talking about the way, I'm talking about risk-free way you won't find. If you find any better way, put it in the comment box. That also put in the comment box. If you like video, if you share your feedback in the comment box. Also make sure to share this video with your friends or with your family or in social media, because that might help them also. If you didn't yet subscribe this channel, click on the subscribe button that is already in your screen, because that will help you a lot. You will get my upcoming videos. So as on today, that's it from my end. Stay tuned for more insightful video in this channel. Happy investing. Goodbye.